Welcome to another inspiring episode of the Elite Expert Insider Podcast. Hosts Melanie Johnson and Jenn Foster are the owners of Elite Online Publishing. They're both Wall Street Journal, USA Today best-selling authors. We're really glad you're here because this podcast was designed for you. Meet industry experts that share their secrets and strategies. Get successful results for your business in money, relationships, health, and your life. Each episode is going to inspire you to take action towards reaching your greatness.
Hey everyone, it's Melanie Johnson. Thanks for joining us for another show today. I've got my business partner here, Jenn Foster. Hey, Jenn.
Hey everyone, how's it going today?
So we hope you're having a great day. The markets have changed so much. We are going to learn about cryptocurrency today. We're diving deep into this with an expert. Jeff Sekinger is joining us. But I have so many questions. I've invested in crypto. My family's invested in crypto. Do you take crypto for your business? Do you not take it? Oh my gosh, now it tanked with the stock market. Is it still a good investment? Which ones do I invest in? All right, you want to know the answers to all those? We have them for you today with Jeff. Jeff, thanks for coming.
Yeah, absolutely. Thanks for having me. Excited to be here.
Jeff, tell us a little bit about yourself and how you got into this market.
Yeah, so I actually bought Bitcoin back in 2013. It was a hot trend. It was kind of when I was in college, actually. And then when I left, I sold it a year later. So I'm not a Bitcoin billionaire yet. But later, I finished my finance degree. I went to JP Morgan. I got licensed and I was in asset management. And I realized that I was just naturally gravitating towards crypto. And that was kind of in 2017 when Bitcoin went from 1,100 to 20 grand. So there was a lot of buzz around it. And when that happened, I used that time to do research into what blockchain is and cryptography is and what the potential use cases were, because it was all just strictly speculation back then. Now we have a little bit of utility now in 2022. But I realized that it wasn't just going to be a trend and a fad that went away. So I ended up leaving JP Morgan in 2018 and then started my first hedge fund in 2019. So we've had we've been over 3 years old now, and also run an education business that educates, entrepreneurs and investors about specifically digital assets and investing in general. So grown a lot recently, and obviously super volatile asset class. So excited to be here.
So where do you think we are in the market right now? It's been crazy just the last year or so. Well, actually since March, we were at 40 some odd thousand for Bitcoin, and now it's been down at 19 and everything else kind of went along with it. Where would you say we are now?
Yeah, if we look traditionally, Bitcoin has typically 85% drawdowns from all-time highs. And that's happened the previous two bear markets. So it's not, and we've had a drawdown of 75% from 69K down to about 17,500. So we have come very close to the previous drawdowns. And I wouldn't be surprised if, what I always tell people is no one can time the bottom. But if we look at just on a technical basis, if we look at like a 200 period moving average on a weekly time frame, or a 2-year moving average, or we look at certain on-chain metrics, a lot of them show that Bitcoin has bottomed or is very close to bottoming. So what I would say is we're likely a lot closer to the bottom than we are to the top. And for long-term investors, I think it should look quite appetizing right now. The X factor is what is happening in the macro economy and how is that going to impact Bitcoin and digital assets, because we've never seen a true recession. We haven't had a real recession in 13 years, and Bitcoin's 13 years old. So we've never really seen how these assets behave during an actual recession. So it'll be interesting to see what happens. And also I would say typically we have 3 years of a bull market, 3 years of bull market, 1 year of a bear market. And we haven't been quite 365 days in. I think the 365-day mark would put us towards the end of this year in November time frame. So technically on a time frame basis, we're getting pretty close. We're not quite there yet. If we look at technicals and on-chain metrics, a lot of them do point that we've had the bottom or we're very close to it.
What would you tell people that are skeptical about cryptocurrency and still haven't invested in it? I have a few friends who are just like, well, I would never buy crypto. I don't understand it. Or Or I see that the numbers are always going down, but that's not true, is it? So tell us about a little bit about that.
Yeah, I mean, Bitcoin, even with its drawdown, it's still up over 100% compounded annual growth rate over the past decade. So that is quite extensive. If you have anything that grows 100% over every year on average, not every single year, but on average over a decade, that's a really big deal. So it all depends on the time frame that people are looking at the asset. And what I would say is what you really want, I always think back to this Jeff Bezos interview where he mentioned that, during the tech bubble, when everything sold off, Amazon went down like 96%. And he was looking at his stock price just tanking, but he knew that fundamentally Amazon.com was growing. All of the metrics of users and everything that he put value on, that was all growing underneath the stock price dropping. So he knew it was going to be a really big deal when, the overall markets recovered and they saw the value in Amazon. And then obviously it's grown just massively since then. So that's actually what you want as an investor. You want prices going down and fundamentals growing. And I'll say about the biggest fundamental shift that we've had. I mean, we just had Binance partner with MasterCard last week and roll out payments through their credit cards to actually use more than a dozen cryptocurrencies as payments with one of the biggest credit card companies in the entire world. We had BlackRock, which is a $10 trillion asset manager, which is over 10 times the size of all of crypto combined. They rolled out Bitcoin trading to their biggest institutional clients, and they partnered strategically with Coinbase. And we've seen, Fidelity is rolling it out to all of their clients later this year. We continually see all these really big shifts. And one of the last things I'll mention, because we could go on and on about all the companies buying it, over 20 insurance companies and all the public companies, and Harvard, Yale, and Brown putting in their endowments. Wow. The big thing that we've seen, the reason why crypto has lagged is because there's no regulatory clarity. And we've started to get that over the past really few months, to be honest, where they've deemed Bitcoin as a commodity. And then that's why we then saw BlackRock say, hey, we only want to open up Bitcoin trading because we know that's a commodity. It's not a security token. And now we're starting to get, the SEC is starting to give a little bit more clarity on what is a security, what's not a security, which then allows the big institutional money, the trillions and trillions of dollars to come in. So we're right on the tipping point, in my personal opinion. And I think if you've got a perspective long-term, we're in a really good spot that should look pretty attractive.
So we've talked a lot about Bitcoin. What about the other coins? That's where I think a lot of the confusion comes in and people get into these trash coins, so to speak, and, up and down. What is your suggestion on those? And what are other things that you like?
Yeah, I think it can be really quite confusing when people don't understand what could be valuable in the future. For us, what we really like to invest in is we like to make data-driven decisions. And a lot of these coins don't have a lot of data behind them, and they're extremely speculative because a lot of them are just like governance coins where you hold the coin and you can vote on an upgrade to an overall, protocol. What I would say before I even dive into this is you got to realize when you're investing in businesses, it's completely different. You're investing in a cash flowing business. And what the thing you need to separate is we're no longer investing into companies. We're investing into protocols. And that's really a piece of code that in a lot of them can replace, agencies and companies and central powers, even because we're starting to see things being used as an actual currency. So that's the first thing is from an investing standpoint, you have to make a decision to say, hey, I'm making a piece of my portfolio protocol based, not, this isn't a traditional equity and I can't value it the same way. One of the ways that we do like to value different coins is by the metrics behind the blockchain. So how we look at Ethereum, for example, is that's an open source protocol, very similar to AWS, Amazon Web Services. You can go host a website, you can go build an application on top of there. The same thing works with Ethereum. You can go build out any type of application. It's called a smart contract. You can develop your own smart contract to do whatever you want it to do. And there's infinite use cases. And, I could give a few examples if you want me to, but what you're betting on is you're betting on the growth of that ecosystem and that platform expanding. So the things that we look at is number of new wallets coming on the Ethereum network, number of active wallets on the Ethereum network, number of transactions. We want to obviously see the transactions growing, number of NFTs being minted on the blockchain. There's quite a few different things we can look at. And the reason why that gives the ETH coin value is because each transaction on the blockchain uses the ETH coin as a gas fee. So there's little fees involved on each transaction. So the more transactions, the more developers building on top of Ethereum, the more people using Ethereum, that uses the coin as a gas fee. So it overall builds and grows the adoption. And it's also used as that native currency within inside of that ecosystem. So you're really building like an ecosystem that has like a big network effect, and it's kind of its own like ecosystem. And that coin continues to get more and more value and utility as that ecosystem continues to grow. And Ethereum just made a change collectively to actually all the gas fees. Now they're actually taking those fees and they're burning the ETH coin. So that's another important metric that we look at. What's the coin metrics look like? We don't want to see something that's infinitely, being printed like the US dollar. We would prefer to have things that actually reduce supply. So the more Ethereum is being used, the more that they're actually burning the coin, which means reducing the supply, which is obviously really good for price. Just so you guys know, those are called layer one blockchains. So they're their own blockchain and they have their own native coin. The majority of crypto does not have their own blockchain. So we do a lot of research into these different blockchains that have their own coin to make sure that the fundamental metrics underneath are growing, so that we can then say, okay, yeah, that coin could actually have some value in the future because we see all of the metrics growing. But a lot of the other coins are complete nonsense. There's over 20,000. A lot of them don't do anything, and there's no way to like value them. So it can be quite confusing for people that don't know how to like separate or what to look for.
Yeah. What would you say for business owners? Like, I see more and more people accepting cryptocurrency as payment. What do you think the future of that looks like? And should business owners be looking at doing that?
Yeah, I think it's pretty wise because you can just bring in a whole new customer base. So like there's really easy merchants that you can use. I think it's called Coinbase Commerce is what it's called. And you can just enroll with them. And I think it's a really small fee, very similar to the merchant processing fee. And you accept crypto and they can convert it to fiat currency and send it to you. So I think it's really wise to accept it as a business, and you don't have to be worried about the volatility because number one, you can accept a stable coin, or number two, you can just go something with like Coinbase and just accept that. And like another thing that shows adoption, but is also in the payments realm, is a Strike is an application that you can go download on your phone. But they're somewhat of a recently new company that they rolled out to over 60 merchants in the United States. So you can use through the Square Cash app, actually, even you can go scan a QR code and pay for whatever you're buying. Coffee, if you're getting Chipotle, if you're going to Whole Foods, you can pay for things with Bitcoin, and the Strike app actually use it for the Bitcoin through something called the Lightning Network. So it happens instantly, and then it converts it to fiat and pays the merchant with the retailer, the business, with no merchant processing fee. So it can actually be more efficient for the business. And again, you don't have to worry about the volatility, because that's usually one of the biggest things that people are worried about. What if I accept it drops by 50%? There's ways around that. So I think it's wise to open it up as a business, because I think you'll just get more customers.
Mm-hmm. What do you think about going back to the smart contracts? A lot of people don't even know what a smart contract is. So maybe just explain what from your point of view, what a smart contract is, and then how businesses can use it. We used it for an author that launched a book, and we added intellectual property when people purchased a book, that they got an NFT with the smart contract. How do you see that in the future, and for authors as well, for using it for publishing?
Yeah, we're actually building a platform that should be launching this month. We've been getting it developed for about 6 months now, but we also own some real estate and mine cryptocurrency as well. So what we're doing is we're actually tokenizing some of our properties and mining facilities. So what that means is we'll bring our deal. Let's say we have a $1 million mining facility. We bring that $1 million mining facility onto our platform. We tokenize it through a smart contract. which we're using the Binance Smart Chain. Not that it really matters, but we're using that, which is its own, blockchain, right? So we're tokenizing that entire $1 million mining facility. And let's say that you go and you buy 10% of that mining facility. You're getting 10% of that mining facility that's in the form of NFTs. So they're non-fungible tokens, and that goes into your wallet. And then on a bi-weekly basis, what happens is the income from that mining facility, which we use the net operating income, so after expenses, that income passes through to all the token holders. So it goes right through the smart contract, and everyone, let's say you own 10% of the property or 10% of the facility, then that 10% of the net operating income gets passed through the smart contract into your wallet on a bi-weekly basis. And that's something you can set up and just have that run. So that's something that we're doing ourselves. We think real estate's going to be heavily impacted by NFTs because you could fractionally own, a $1 billion building and again, pass income through a smart contract. You can also host the titles of properties on a blockchain instead of it taking 35 days or 60 days to close on a property. It could happen in 60 seconds. And it just makes everything, more efficient. So I think NFTs are going to be a really big deal. Another thing is like membership NFTs is, there's a lot of those use cases coming out right now. And you can be really creative with the membership NFTs. You could have someone like we host some masterminds, and you could have your own mastermind for whatever you specialize in. And instead of them just paying you money up front, they can buy an NFT that represents their membership. And if you integrate it with Discord, you can actually let in only people that have that NFT in their wallet. And then when the NFT leaves, they actually get kicked out of the mastermind platform on Discord. They can also use that to get into events. We saw Gary Vee do this as well. Hey, you have to have the NFT to get into the events. So there's a lot of really unique use cases. And you kind of mentioned publishing. I think that's going to be a really big deal for publishing. I think it'll be important for in this case, the author to have ownership over what they are writing and publishing. And that we see this with music as well, really heavily in the music industry as well. When artists release their albums, they can really own a larger piece of their albums. And it just kind of provides a better way for the end consumer to even feel like they're more a part of something as well. By they own something that has some value that can obviously fluctuate based on the market. And then the utility is really up to the business to what type of utility they want to include in the NFT. So I think we're just scratching the surface, and it'll be really, really cool to see how this industry grows.
So let's talk about taxes. So people are making all this money in crypto, and especially NFTs came out, people were making, $10 million launching their NFT, and they're getting all this money in crypto. And it's this IRS is beefing up all their people that just passed. And people are like, well, do I get taxed on my crypto? How do I move my crypto? I mean, it's kind of this gray area.
Yeah, it is. It is definitely a taxable event. I'll tell you that. If you're buying anything with Bitcoin or Ethereum, let's say you buy a coffee with Bitcoin, that's still going to be, you're converting that to something else, which there's going to be a capital gain or loss on it. So it is important to realize that anytime you're spending the crypto to get something, or you're converting that crypto into another crypto, that is a taxable event. And the one thing that is really advantageous is it's taxed like property in the United States. And there's no wash sale rule. So you can actually, if you have losses, which by the way, I'm not a tax advisor, so definitely confirm this, and the laws could change. But there are some advantageous laws that are, if you have big losses this year, you can sell the crypto and buy it right back and realize a loss, but still own that asset, even if you're buying it back within 30 days. So that's something unique to crypto that you can't do in stocks anymore. And we'll see if that continues to happen. But there's a company called CoinLedger.io, and taxes are super complicated for crypto. But if you go to CoinLedger.io, and I'm not affiliated with them in any way, but they just make it super easy. You just download your transactions from every exchange you have or from a wallet, and you just upload all the transactions into CoinLedger, and they can connect through an API as well. But it pretty much does your taxes. And you can check if you want to use a FIFO or a LIFO accounting method, but it makes it 1,000 times easier because if you go through every transaction, it is not an easy thing to do. I will tell you that, especially if you're really active. So I think something like that software would really help a lot of people.
Okay. And then talk about, I heard you mention in another interview, city coins. What in the heck are city coins? That's something new.
Yeah, so that's like a kind of a way for a city to raise money. And it's also simultaneously a way for you to kind of bet back your own city. So Miami was the first city to launch Miami coin, which it raised tens of millions of dollars for the city of Miami, which was like a really big deal, right? Because it's a new concept and it actually had a lot of success. And it was kind of a way for Miami residents, or really anyone, to kind of bet on the city of Miami continuing to grow and become more popular. But simultaneously, you're also funding certain things that allow them to build more infrastructure or buildings, or, you know, pay for all the government agencies. So it's a really unique new concept. We'll see if it starts to gain traction. I wouldn't be surprised if we see one roll out in Texas, since they're pretty, you know, friendly to digital assets and mining and all of that. So I think we're going to start to see that. But I also think if there is, depending on how the SEC would view that, there's kind of a big battle going on between the CFTC and the SEC on who gets governance over them, because is it a commodity, is it a security? And I would be really curious as to what their opinion is on the city coins. If it is more of like a deemed a commodity and not a security, I would not be surprised if we see a lot of cities start to roll that out. But yeah, it was really interesting. It was really successful for Miami, and really unique, you know, use case to digital assets in general.
And do you think that crypto will eventually make banks go out of business? I mean, will banks become like Blockbuster?
They need to evolve. I think they really need to evolve and start to, like, for example, like we run different funds and it can become really difficult. We've had like 2 banks just randomly say, up, we got to close your accounts because we're no longer working with any type of crypto companies. But then we see some newer banks, and like Warren Buffett just took a big stake in a crypto friendly bank on just buying equity in the company. But we're seeing some of these newer like fintech type banks like say, hey, we're okay to service some digital asset based companies. So I think if they are not coming around to it and accepting it, my thing is, regardless of regulation, regardless of the current infrastructure that's in place, they have to adopt it, because if they don't, they'll die. And I really think that the best technology is always going to prevail. And I'll say this last thing about banks is there's a big shift going on from SWIFT, the SWIFT banking system, over to a new language that all banks are going to use called ISO 222. You can go look it up. It's ISO 222. And there is a few blockchains that are approved. So the banks will be using blockchain technology to transact and to move value through the blockchains in a more efficient manner. Some of the blockchains, you know, Ripple, Stellar, there's a coin that's approved called XDC, and they're considering Quant, Algorand, Cardano, and a few others. But the ISO is that's a really big shift that all the banks are going to be adopting next year in November of 2023. And that is right around the corner. So they pretty much won't have much of an option, I think, over the next 5 years.
Well, and I was thinking, gosh, some of these, I mean, you can borrow money, you know, Solano's lending money out, you're making 4% and doing this kind of stuff. You don't have to borrow from the bank. You can just borrow from crypto.
Yep. Yeah. You just take secured loans against your assets. And as long as you're educated on the risks of leverage and things and keep loan to value low, it can be really advantageous for people. So yeah, we're definitely seeing a really big shift. And I think, you know, finance, that's why DeFi, I think, is going to be a really big deal, decentralized finance. And that's, you know, a sector that I study pretty heavily, because I think that is going to be one of the bigger sectors and use cases for digital assets over the next 5 to 10 years. I think it's going to change a lot.
Yeah. I mean, you know, just to get a mortgage, you have to jump through all these hoops and all this paperwork, versus it's so simple if you just are doing it through crypto. So,
exactly.
So I squeezed in a few extra questions, Jen.
I like those. Those are great questions. Well, tell us where people can go to find you.
Yeah, I'm probably most active on Instagram, YouTube, and Twitter, which it's just my name. So at Jeff Sekinger, which is JEFFSEKINGER. So that'd be the best way. We produce a fair amount of free content on all those platforms. So I'm sure you get some value if you look me up there.
Great. We'll put that link up in the show notes as well as on the YouTube description.
Awesome.
Well, thanks for stopping by. And remember, if you're looking to become an author, write a book, and tell your story, we've focused on nonfiction books mostly. Reach out to us at Elite Online Publishing. We guarantee you'll be a #1 bestseller if you're a good fit for us. We'll talk to you soon. Thanks.
Have a great day.
Hey, are you looking to increase your revenue, build credibility, and elevate your brand? This podcast is brought to you by Elite Online Publishing, an innovative publishing and full spectrum marketing company. They will publish and market your book to make it a #1 bestseller. Becoming an author is the best way to market your business. So contact them at eliteonlinepublishing.com today. All of their authors become #1 bestsellers.